Hello everyone, earnings was a miss. So in today's video, we're going to try to make it nice, short, and sweet. We're going to talk about the overall market, the tech stocks, the IWM, the dollar, the bonds, the VIX, and the overall landscape of what is yet to come in the market. All right, so without further ado, let's get started with the video. Apple had its first earnings miss in over 7 years. So obviously Apple did not do well. Apple is down in the after hours. Amazon didn't do that terribly, but they also did not have as good guidance, and they missed sales just a bit in terms of like the growth for what the expectations were for AWS. And then Google missed earnings much worse. So Google, all of these companies are trillion-dollar companies. So obviously when we see all of them missing like this, they're definitely going to have a big impact in the market. So we can see that Apple is down in the after hours. Google is also down in the after hours. Amazon is also down in the after hours. So now overall, to make this simple, this is a chart of the NASDAQ. All right. And we can clearly see that the NASDAQ is very, very overextended to the upside in terms of distance away from the upper level of the standard deviation. We can see that it's trading very overextended to the upside. So on the NASDAQ, we bought into March puts, and then we also got into Lotto puts that expire in 4 days, 310 puts. The reason for that is because when you look at the chart, we're already very, very overextended to the upside, right? But then when you look at Apple, Google, Amazon, you can just quickly look at all of them. They are very, very overextended to the upside. So if they had good earnings, they would be even more overextended to the upside. The odds of that happening is very, very low. So one of the reasons why we had this run up is because usually, it doesn't always happen this drastically, but usually heading into earnings, there is always something called a earnings run up. So heading into earnings, they make things look very, very bullish. The stock is being bought up. And then depending on how the earnings comes out, it's either flat, does really, really well, or it falls. The more strength we have prior to earnings in a stock, the less likely that it gaps up and shows this much strength. So that was my intuition. That's why I ended up going short on NASDAQ. Let's see if this move to the downside maintains itself. Of course, anything in the after hours could just be a fake move. But overall, I mean, that was my thought process for why I did that. I am bearish heading into tomorrow. And we could take a look at other things to basically help understand why I was also bearish. So we can quickly take a look at the SPY. We see that we clearly closed above this 412 level, basically. And let's see if we get a retest. As the NASDAQ is showing weakness, let's see if we get a retest of back to this level and then see if we can continue up. But overall, the SPY is also very, very overextended to the upside. And taking a look at the Russell, we're also very overextended to the upside. So the whole market is showing extreme, extreme greed. It doesn't make sense. It would not have made sense for us to gap up even heavier with tech stock earnings beating. That would be very, very unlikely. And then if we ended up gapping up again, being that far overextended to the upside on the NASDAQ away from the Bollinger Band, it would be that would just be very, very algorithmically overextended to the upside. And we would just short again, to be honest. But so far, we've taken a look at the overall indices and the large tech stocks, right? But now we definitely have to take a look at the bonds, the dollar, and the VIX to get a better understanding of why I thought we would have a bit of a pullback. So number one, with the bonds, we know that the bonds have a bit of a correlated relationship to the market. If the bonds are doing well, then the stock market is also going to be doing well. So one of the things that was a bit of a warning signal is that the bonds had a wick, an upper wick like this, yet we didn't close or fill this candle up. So we had a big move to the upside, and then we ended up just selling off and closing below yesterday's high. So generally, that's not the best setup on any indice or anything like that. But basically, it can continue moving upwards as long as 130, 120, or even the 131 level can hold. But overall, this is just not showing the most strength. All right. Next, I want to take a look at the dollar. The dollar was one of the main things that really solidified that we should have a bit of a pullback. So the dollar, we know, has a bit of a uncorrelated relationship to the market. So if the dollar is doing well, then the stock market should be falling. So the dollar opened outside of the lower level of the Bollinger Band. So we know that on the indices, and we know that like in general on the $1 trillion companies, when something opens outside of the lower standard deviation like this, it's usually a very, very good buy signal, and we get a bounce. Not just one day of bounce, we usually get another day of follow through the next day as well. So if that's the case and the dollar was bouncing, right, strength in the dollar means that the market should be weak. And if we got this overextended to the downside, had a big strong move, it's likely that we should have another move to the upside tomorrow on the dollar. And if we have another move to the upside tomorrow on the dollar, then the market should fall. And simply there's that, honestly, for the dollar. We see a clear cut open below major levels of support and a retracement back above at least 50% of this prior candle. So this is clearly a very, very strong bounce from the dollar. Let's just see if we can break and continue to break above these major levels of resistance for the dollar. But next, let's go ahead and take a look at the VIX. So next we have the VIX. It's a similar setup to what happened with the dollar. The dollar, we opened low lower than all of these prior lows, and we bounced. So that's it's similar in that respect, but the overall momentum of the VIX is still weak. So we know that the VIX has an inverted relationship to the market. So if the VIX is doing well, then the stock market should be falling. But currently, right, this is the first instance of like a reversal pattern on the VIX. But this still does not change the fact that the overall momentum of the VIX is still weak and still falling lower. So if the VIX ends up falling lower, then the stock market should continue to fall, should continue to rise. So that's the only difference. But currently, the VIX bounced up, it wicked, it basically went out for people's stop losses, and it had a bounce. So now let's see if tomorrow we can also get another bounce in the VIX, another bounce in the dollar. And if that bounce upwards in the dollar and the VIX can cause the market to fall lower. And last but not least, this is a chart of the SPX. You can see that the SPX is at two very major important levels. Number one being from the March 2009 bottom. This skinnier green trend line is that trend line from the March 2009 bottom, and it's acted as resistance and support moving forward. Not moving forward, in the past. And this white line is 418 on the SPX. So 418 is also very important resistance. So we are at two major levels of resistance on the SPX, very overextended to the upside, and it is very, very unlikely that we continue to break tomorrow. It would be very, very unlikely to have a break upwards tomorrow. It would be even more unlikely to have a gap up. But the only thing that I could think that would end up happening is if we get a gap down, and based off of the gap down, we get a bigger move to the upside. But generally, heading into a major level of resistance, if you get a huge move up and then you hit resistance, it's unlikely that that move can sustain itself without some sort of a pullback. But if we ended up consolidating a bit below resistance, then you could basically pick up steam again and have a rip to the upside. So currently, we obviously had a big move to the upside to resistance, and the NASDAQ is overextended. The tech stocks didn't have proper earnings with bad guidance. The dollar bounced, the VIX bounced. We should get a bit of a pullback. So with that being said, I hope you guys enjoyed today's video. Make sure to like, comment, subscribe, do all that good stuff, and I will see you guys tomorrow. Thank you.